Cheers guys, good morning. Today we're gonna discuss about the things that I wish I knew when I started off trading. So let's get into it. Alright, so we are back today on Tuesday. I did not change anything from the chart from yesterday, so let's have a look where we were at. Okay, so now yesterday we didn't get position as expected, which is perfectly fine for a Monday. So for Tuesday, what we're gonna do is we just had London opening, and we're gonna mark out Asian high, Asian low as usual. So we're in this range. Yesterday I was expecting it to either crash down, or if it wants to come up, I was expecting it to go a little bit higher. But it seems like the market still wants to decide whether it's going to further go down or pull back into a possible new higher high, right? So let's look at the higher time frame real quick. Not to trade in it, but to have an understanding of what the market is trying to do. Sometimes when I see higher time frames or even in lower time frames, I like to switch the type of candle into line chart. Okay, when you switch the chart type to line chart, what happens is you can see exactly where the volume went and the volume retraced. For example, if you see a candlestick, so an example right here, if you have a candlestick, that would not work, and sometimes it has wicks, right? And this wicks mean the volume came all the way here and it retraced, depending on the time frame. What happens is when we see a wick, we tend to sort of mark out levels at the tip of the wick, the top tip of the wick, or the bottom wick, right? But what happens is the actual price actually closes where the volume closes. This area right here is only an idea of how far the price was able to go, whether it's down or up, but it doesn't mean that's where the market stopped. Where the market actually stopped is the area where the candlestick closed, right? So when we use a line chart, we are not dealt with the wicks, we are only dealt with the body of the candle. So this is where the body of this candle finishes. For example, I'll give you an example. This should be the top. Let's see if it really is. See, the wick is up here, but the body is actually down here. And if you go back to line, that is only the body. Okay, that's a little trick you can use. What does this help is it helps me identify where exactly was the support and where exactly was the resistance without being disturbed by excess wicks, right? Now I'm gonna sort of see the support level right here and where we at. We might have even touched it with a wick. No, we haven't, but it is definitely in the zone. We're definitely already in the support zone over here. Last time when they support to control, it bounced all the way back up here to potential higher high. But what I don't like about the setup right now is you see these two highs over here, sort of in a similar level right here, could potentially show reversal. It could potentially crash down and go even lower. And I'm not saying it will, but one thing that could happen that manipulates a lot of retail traders and gets you, well, hits your stop loss is what happens is price might go lower, and people might tend to think, oh, it will retest and it will go even further lower. But what the market does is price does go lower, and instead of retesting and going further lower, it will come back up here and it will pull all the way back into a bull market. So what will that do is all the people who went for short entries are going to get stopped out, and those who sort of predicted the bull entry can profit. But that's not what we're doing. That this is just an idea, a pure 50-50% of what might happen. So we cannot trade in a 50-50% situation. We need to be at least more than 50%, 70% towards your favor, right? So that's the deal here on the higher time frame. It could go down or it could go up, but that will depend on the setup we get by New York session today. Okay, I hope you guys are catching up. I hope I'm not going too fast. Also guys, comment down below if you want me to live stream when I have open positions, or when I will have open positions. If you're interested, comment down below, comment live stream if you are interested. I might try. I've never tried it, but that would be a fun thing to do as well. Anyways, right now we are seeing a range. Oh, how I do it. So for example, just a rough idea. We were respecting this trend line a few days ago. Now we are currently in a different setting. Okay, so I don't usually draw trend lines anymore. I realized that trading is not about drawing lines and going from A to B or B to C. It's about understanding the price. It's about knowing where is liquidity, what happens when news breaks out, etc. And there are many theories like SMC, etc. But I like to trade my own system, so I don't know what to title the system that I trade, but it is not like SMC or the other strategies that is available on the internet. I don't know much about it, but I mean, if it's profitable, it's profitable. That's all you need to be in this game. It doesn't matter what type of strategy you have. What matters is, are you profitable? Okay? Ciao.